Hi everyone, welcome back to the channel. Today I would like to share this three subject with you. What's the difference between trading the currency market, investing in the stock market, and likewise investing in the property market. These three assets or these three ways of making money from the market, to me it means different thing. Okay, let me start with trading. Okay, trading to me is basically a high income skill. What do I mean by that? Back then when I started trading, right, it is basically trying to replace my working income, right? From there, I will start learning a skill. And if you ask me, when I look at trading, am I trying to look at long term or short term? Actually, in terms of trading, right, I'm looking at very short term. Then coming back to investing in the stock market, when I look at the stock market, what it means to me is compounding interest, right? It means, again, longer term time horizon. And then coming back to investing in property, I'm looking at cash flow. Means trying to buy a property that constantly give me a monthly income or potentially a capital upside. In trading, what am I looking at? Okay, in trading, I have no intention to know where is the market heading. Okay, I'm just basically trying to look at where's the flow of money. Is it going up, going down, or ranging? Because if it's going up and down, I will probably buy and sell. If it's a range market, I will probably do not do anything about it, right? And then after looking at the flow of money, what I will look at is actually the different price level, right? These are what I call by structural level in the market. And then from there, I will look at price action, see if price is rejecting the levels or not. If it's rejecting, then yes, I'm looking to execute a trade. But before I execute a trade, one thing that I want to do is actually to do risk management and money management. Okay, I will elaborate this in future videos, but this is how I will look at it. Coming back to investing in the stock market, remember the word that I use is what? Compounding. Stock market is basically for me to grow my wealth. Okay, if I make money in the trading market, what I will put my money in the investing world. Right? Because I want to compound it over year. I'm looking at what 8 to 12% kind of return that I'm doing currently for my own portfolio. And that's the whole objective I'm trying to do, because I know one day I will probably not be around to really trade the market. I want the portfolio to continue to give me money. Okay, then going back to a short introduction of the stock market. There's two ways that I look at the stock market. One is the growth sector. Secondly is the undervalued companies, which is what Warren Buffett always say by value investing. Okay, so this is the way I will look at it for the portfolio that I'm constructing. But if you ask me from the top-down approach, means the step-by-step approach for investing, right? What I will do, I will always look at the macro view of the market. Means I will actually see which economy is doing well, okay, over the long run or at this current moment in the near future. Okay, let's say now US is booming. So what I will do, I will actually go into the sector itself, because there will be sectors in the economy, in the country that is making money or not. And then from there, I always tell people, don't invest in the whole sector. What you should do is invest in the leader of the sector, because from there then you will get the best of class, the best company in the sector. And then from there, I will look at again risk management. Okay, I will look at whether am I buying the company at a discount or at a premium. Okay, how we do that, very simple, is basically looking at the book value and the market value, which is the stock market price. So if it's premium, it means that the market value is more expensive than the book value. Okay, there's many ways to do the calculation. Okay, but I should not dwell on that. Or if it's buying at a discount, which is an undervalued company, then obviously the book value is actually higher than the market value. Okay, then of course looking at the growth company, right? Because there will be sectors that are having a growth team for the country. Okay, like probably in US for the last few years, the growth industry is the technology company. Okay, so this is how I will position my money. And likewise, of course, the last thing, right, is risk management. How much am I willing to lose, and how much can I lose for that portfolio? But again, in stock market is slightly different, because end of the day it's about portfolio construction, right? Means we want to create a portfolio that in various industry, so that I do not have concentration risk in just one sector, right? I need to have some diversification. Okay, and one thing about diversification, right, is don't diversify for the sake of diversification. Okay, don't diversify for the sake of diversification. So this is one thing. I will also elaborate this video in future videos also. Do watch those videos, because those are the videos that I will be a bit more specific in all these things. Okay, so the third one, investing in property. So investing in property, the keyword I have for you is cash flow. Okay, cash flow is very important in investing in the property market. So two ways to make money in the property market is basically capital gain or dividend, or not say dividend, rental income, right, which is sort of like a dividend for your stock portfolio. So end of the day, when I look at a property, they always say it's about location. Yes, locations is important, but again, is the country economy is also important. You do not want to buy property in a country that the economy is not doing well, right? So again, we need a fundamental, and then from there we go to location, like whether this location is in demand comparing to other location. Let's say the location is in demand. There could be other projects over there that is competing for your attention, right? So you need to study each project and find the best of it, okay, to invest in it. However, for the property market, pricing, which is technical analysis, is very difficult to look at, because there's not enough transaction comparing to the stock market or even the trading market. So that is why for property investing, I like to focus on cash flow. I like to invest in a property where I will potentially have 5 to 10 years of cash flow, right? Don't just think of cash flow as having a down payment, servicing the loan every month. No, that should not be the way. You should think of property investing as a very long-term gain. I want to end off these three words with you. If you are looking at trading, I'm only looking at high income skill. If you're looking at investing, I'm looking at basically compounding my money. And you're looking in property investing, right? This one keyword that you need to think of is cash flow. So I hope that you like this video. Please like the video, subscribe to the channel, and comment if you have any question for me. And lastly, please turn on the notification. Thank you for spending your time in this video. See you in the next video. Thank you, guys.